Okay, good morning, good evening, depending on where you're at in the world. This video is about futures trading and how high can a contract go. This particular market here is the March 08 soybean contract. This chart is a weekly and it goes back to the summer of 04. That's quite a ways back. The high point here is about 957. That's about as high as it got for quite some time. Look at this. Gone down, stayed down, but now it's going up. This come to my attention today as I was asked, how high is this thing going to go? Should I get out? Well, if you got stop losses in, let the stops take you out. Market will keep you in and the market will take you out. You get the overall picture of what the market is doing. Again, this is the weekly. Look at the MACD. This is pretty strong. This is a momentum chart. This tells you what the momentum of the price at buy, etc. is doing, and this is sticking right up there. This is a pretty strong weekly market. Chances are better than good. It's still going to go up. Last week's close is right around 1339, and it was an up close. When you get an up close, sometimes they just keep going up. I'm going to switch this over to the day chart to give you an idea of how this thing is a little more current and how it's working and what you might want to do. Okay, this is the daily soybean chart for March of 08, this current year. It's going up. The MACD is pulled back a bit. Look at that, you got a little bit of divergence there. This is going up still. Indicators diverging from price. Momentum, that's slowed down too. This went up here, down here. It dropped off, it's the same, went right along, but the momentum wasn't all that strong. So what you're doing is getting probably a little bit of a pullback. If that happens, how do you handle it? Have you got your stop losses in? Here's a good stop loss point. There's probably 100 different ways to determine the stops on where they should go. I find a support point, and that's generally where I will put a stop. There's one right here, some over here, support point. You can get them in here as long as you have stop losses in. If you don't have, then you better get out, because then it doesn't matter how high it goes. When it goes down, it'll go down with a thud. That's usually what happens with these markets. They'll go up, and then all of a sudden, for whatever reason, they turn around and just bang, they're down. If you don't have a stop loss in, you're going to be in problems. I lost a friend about 10 or so years ago because he didn't use stops. It was in unleaded gas. So him get his stops in, he didn't listen, and he lost everything he had, and he kind of ended everything. Anyhow, get back to this. You have to plan your trade and then trade your plan. Your plan had better have stop losses. If they don't, you really don't have any business in this market, because you're going to lose. It'll get you sooner or later if you're sticking on luck. Don't try and pick tops. Don't try and pick bottoms. Let the market take you out. If you got a stop loss in, it goes up and turns around on you, your stops will take you out. If you're on the other side of the market and markets are going down, if you got your stop losses in and all of a sudden zooms up for whatever reason, some market movement news, your stops will take you out. But have them. For crying out loud, plan your trade. Trade your plan and you'll do okay. There's a free ebook on my site, myfuturesblog.com. I wrote it about 10 years ago, 1997 I guess it was, and it tells you all about how to work your stops, how to plan your trade, what to expect. I use it all the time. It's in PDF format, so you can pick it up. Anybody can use it now, I guess, and it's free. It's at myfuturesblog.com. I hope to see you there. One quick note again. Plan your trade. then trade your plan. And put some stops in there. If you don't, get out of this business. Until the next time, this is Dick Toller. Good trading to all.